What are some of the
See,
expenses that you look for in a property to see an opportunity? What would be a ratio? Because I know we look at the 50% rules and expense ratio that probably is gonna.
so totally 50, 55. When we buy the property, that's a bad management. Could be also the rent increases. That's a good sign that we could increase the rents like the one in Knoxville, Tennessee. We were able to increase the rents like almost double, because we saw the comparison properties, right? It took us a year and a half to change the demographics and all that. But the big thing is you got to look at the revenue increasing and decreasing expenses. Taxes and insurance, major ones, property taxes and insurance, as you're buying at a higher price than the base of the seller who might have bought it many years back. So you want to put the new mill rate and everything to calculate that, right? Then the management of the property, who was managing it, how much percentage you'll be paying to the new and the salaries. You want to make sure that the leasing and everything is done and marketing. So those expenses, if we can really be straight in the, realistic, look at everything, then you come with NOI, net operating income. Is it higher than what the seller is showing in the P&L? That's when you implement the system, increase the NOI more, and now you take out the interest and the principal down. CapEx, you got to also put the CapEx. Many times people forget CapEx. That's the worst thing can happen because your profits will be after the NOI, after the interest and the principal. If it's interest only for 2 years, that's great. Minus the CapEx, then comes the net income, cash flow, we call it, that you take it to the bank. Now, a lot of people ask me, Vinny, what should be the cap rate of an asset? I said, you know what? You can never take cap rate to the bank,
Yep.
deposit it in your account. It's the cash flow, the net income, bottom line, every month on the month goes into the account. That's what gives out to the investors and yourself.
It's so good. I use cap rates to submit offers, but cap rates don't you can't take those to the bank. The bank doesn't care about the cap rate. They care about how much money you put in the bank, and that's
Yeah,
the
yeah,
story. So that brings us to
yeah.
the final one, flow. Flow
Oh,
is
yeah,
those expenses you just can't change, right? That
yeah.
minimum amount you need to have in there. What are some flow factors to a rental portfolio? As you're acquiring, 200 units or 300 units. What are some flow factors that are always going to be there?
I'm so glad. I mean, all these expenses, which are major cash flow, you have to pay the mortgage, interest, principal, taxes, insurance. You got to pay those by the 5th of the month, right? 6th of the month. That's number one. If you miss two payments, the lender is going to come after you, right? Foreclosure in third month. So that's huge, those big expenses. Then comes salary, because if you cannot pay to the leasing agent, community manager, and all, then they're not going to be excited and everything. So that's
I love how you
their
just phrase
bonus.
that. They won't be excited.
They'll give up. Then marketing comes after that. You got to make sure you're really savvy. Your inflow is coming. Occupancy is huge. You got to make sure that every week you're on target to use the occupancy as a not only that occupancy today, occupancy in 90 days, because we like to look at the report of the residents who have given notices to vacate. They have to give 30-day notice, 60-day notice, like that.